So welcome to webinar by Accounting Yard. Talking about navigating tax audit seamlessly. This is one of those webinars where we try to bridge the gap between theoretical and practical experience, right? And for those who are joining us first time, I will start with explaining some of the ground rules to be able to drive efficiency in terms of how we are hosting the webinar. First is use your name, right? This is a enable seamless interaction between us and participants. Second, everyone contributes, meaning that you're given an opportunity to be able to interact and ask questions, even share your own personal experience in terms of how the subject matter you are someone interested in. Be admitted at all times. And the idea is to have a smooth recording so that you can always rewatch at your own opportunity, right? And this is basically at the end of the day, the video will be recorded and uploaded to YouTube so people can rewatch. So that when we mute you, it enables that seamless understanding of what the webinar is all about. Make use of the chat box as we always go back to the chat box to see what we're saying, right? And you can always ask questions. In case you cannot interact by audio, you can always send chats in the chat box, right? So that we can pick up questions there and be able to attend to them. We're all learning, so no questions is a good question. So as much as possible, I'm open to listening and hearing from you from your own personal experience and questions. Yeah. Who is Accounting Yard? So I know that some of us are new to Accounting Yard. So this will be your first time interacting with accounting as a body. So basically, we're a body set up to be to improve the knowledge of accountants, right? We do this through various means. One of which is delivering practical accounting trainings. Another is through, for example, webinars, right? Another one is through documents which actually prepare and share with people, right? But we also create job opportunities, right? Once we see job opportunities, we share with our body of accountants, right? We have a job group on Telegram where we share accounting related opportunities to people within the accounting community, right? We constantly share practical accounting concepts, right? We will see these in various places, right? So, for example, when you follow us on our social media platforms such as LinkedIn, Instagram, right? You see that we post content linked to practical accounting in these places. Yeah. So if you follow us on these social media platforms, you get to always experience and learn new things relating to your accounting profession from a practical standpoint. Now, we have a tax training which is taking place by 30th of November. So if it's something you think you're interested in, right, do well to reach out to us through our social media platform or even through our registered phone number to just seek more, learn about it and definitely attend and you gain great value from it. Now, who am I, right? So basically, I am the host today. I'm an accountant like you. I have over a decade accounting experience within the finance, accounting, and audit space. Currently, I'm the head of finance of one of the largest agri-tech businesses in Nigeria. I'm also basically very good in plan analysis, right? People that know me well call me Mr. Right, or people call me Prof, right? So I'm called by different names, right? So I'm your host, basically being driving the webinar, right? With me are two panelists, right? The panelists are basically by name one, Fred Omoerah. Fred Omoerah is a professional colleague, right, who has a very over a decade experience within the tax space, right? Two of us attended UI. He's a proud alumni of University of Ibadan. And most time when I have issues with taxes, is one of the people I reach out to. So yeah, in more than capable hands, right? In him being available to be able to be one of the panelists in this webinar. The other person is Richard Okunola. If you know Richard Okunola is a very one of the leading voices in LinkedIn. He has over 50,000 followers in LinkedIn. I'm a very sound professional, right? He's one of those I also respect very within the tax space, quite knowledgeable. It's very up to date in terms of what's happening within the tax space and brings a lot of practical experience. And is someone that's very interested in knowledge sharing, right? We follow him very, very well on Twitter, on LinkedIn. You see there's always delivering value, right? Sharing his personal experience, sharing content to be able to educate the accounting professionals, especially within the tax space. And it's also involved in mentoring young professionals. Yeah. So these are two people who will be on the webinar today. And I know they are more than capable. Unfortunately, I think Fred cannot turn on his camera. But I'm sure Richard can. So I'll give Richard the opportunity to introduce himself, right? Basically explaining, just talking about who he is and what involved it. Then Fred will be able to talk. Richard, if you don't mind, I'm going to put you on. You can put on your camera and I'll put you on spotlight. so that basically people can hear from you directly.
Let's see.
Okay.
All right.
Thanks a lot for
Yeah.
that, Richard.
Thank you.
Okay, so
Okay.
Richard, yeah, just give brief introduction, just so that people just know you, for those who are interacting with you for the first time, and yeah, so that you can get to know that, yeah, yeah.
All right, thank you very much. It's a great privilege to be here. Let me say to be back again, right? Because
Yeah.
I've been at accounting yard before. So yeah, my name is Richard, and I'm a qualified accountant in Nigeria and in the UK. I've also practiced tax across two of the big fours in Nigeria before going to the UK. And my experience span across different industries, from consumer goods to financial services to telecommunication, and just a couple of other industries that you can think of, right? Except for cryptocurrency, yeah, which which you don't have so much businesses that have fully invested in that yet in Nigeria. So, and then I'm doing more of real estate and corporation taxes, right? And that's like a kind of summary. So yeah, over the years, I've got a couple of experience. I facilitate sessions with ICANN and CITN in Nigeria. Interestingly, I'm supposed to be at UNN program that is holding today, but of course, I've already accepted this invitation and I could not decline that. So apologies for anybody that is from UNN that this call that says this guy came here and did not come to our room. I'm so sorry about that. And yeah, I think that's majorly everything about me. I also host a program, a mentorship program that we call Mentorship Caller International. And over the years, we've been able to, mentor about more than 300 people, and currently about 200 people in progress, on everything that talks about accounting. And the goal of that platform, just like we have accounting here doing something like this now, the goal of the platform also is to make sure that our accounting graduates are not just people with theory knowledge. When they finish from school, they cannot transition into full-time job immediately. So that's what we're trying to bridge that gap. And over the years, it has been very fruitful for us. So that's like everything about me. Maybe as time goes by, if you have any question, I'll be happy to answer them also.
All right, thanks a lot, Richard. So I know Fred cannot turn on his video, but Fred can also be able to introduce himself so that people can get to also know one of the panelists on this session. Well, thanks a lot, Richard. We're more than happy to have you live in this session. We're hoping you to share your wealth of experience during the roughly about 2 hours meeting, and I'm sure you deliver value. Thanks a lot for the opportunity joining us today. Yeah, thanks. Fred. Hi, Fred.
Yeah, yeah, hi. Can you hear me?
Yeah, sure, we can hear you loud and clear, Fred.
Okay, great. Good afternoon, everybody. Apologies, I'm unable to turn on my camera. Where I am is not very conducive for me to turn on my camera. Actually, I'm actually working out of office this period. I'm not in town. So my name is Fred. I'm a tax professional. I've worked with two of the leading big fours. I have over 13 years experience in taxation, tax management. My major currently at this time is oil and gas taxation. I've worked for many oil and gas firms and big fours. Pretty much that's my experience so far. I'm happy to be here, and I'm sure that we'll have an interesting session. Thank you.
All right. Thanks a lot, Fred. Thanks a lot for honoring the invitation. We're more than honored to have you be a panelist of this session. Yeah. So someone said his volume is low. Can people just double check that the volume is low, right? So just confirm. Richard, can you hear me clearly? Let's see that I'm sure. Okay,
yes, so it's very clear and audible to me.
Okay, all right, no problem. All right, so I would continue, right? Yeah, so I'll skip expectation of people, not to waste time. I'm sure as we progress during the session, we'll get some expectation of people and be to rectify it when necessary, so that we don't waste time, right? So the first question that comes to mind, right? To just improve the quality of the bandwidth, I'm going to turn off our video and Richard, you can also do the same from your end, just to be able to manage bandwidth, right? So the first question that comes to mind is introduction to tax audit. So the first thing is, what are some of the recent updates in Nigerian tax laws that young entrepreneurs should be aware of, right? Yeah, so I don't know. So basically what will happen is, Richard, you can start, then we'll move on to Fred. Yeah, just some things that people should be aware of in terms of recent developments in Nigerian tax laws that young professionals should be aware of.
All right, thank you very much. Interestingly, I'm just going to be very brief with it so that in case people have specific question, they can ask later.
Yeah,
So
sure.
one of the interesting thing about tax is that there is a lot of changes that keeps going on year in, year out. So without wasting much time, I'll just say that the first step to start with is to look at the Finance Act, right? And the Finance Act have been introduced to make some changes to the tax laws, including changes in something like the education tax in terms of the rate. We have changes in company income tax computation from looking at the investment allowances. We have a lot of changes like that, right, that we can list them out. So the best way to approach that kind of thing, I think there's a background noise somewhere, but the best way to, the best way to approach that kind of tax changes is to first of all get a kind of brief or snippet from maybe any of the big four that publishes them, so that you can now know how they apply to your specific company or industry that you're operating. Right. So, and looking at the recent tax changes too, you can look at, for example, talking about withholding tax regulation that was recently released, and then looking at the implementation date and the application and the commencement date. So you need to understand some of these things too around the tax policy that says that the tax law cannot be applied until after 90 days. So some of those policies also guide how the tax laws become implemented, like the dates that become applicable for treatment. So in general, some of these updates, like I know that you're asking about recent updates, but there are a lot. It's not something that somebody can summarize.
Yeah.
But I'll just say start with the Finance Act, then move to the finance bill that was recently proposed. Look at something like the windfall tax that was introduced for bank and other financial institutions. Look at the withholding tax bill that was also recently signed to become a withholding tax regulation, right? And then also there are some other presidential orders that were signed. For example, VAT exemption on gas and some other, a lot of other presidential orders that were signed and they have been gazetted. So a lot of things like that, you need to look at them holistically so that you don't have a narrow view or understanding of what are the things that changed. So that would be my answer to that. Maybe if we don't have specific question, I can provide more insight on it.
Richard, you're spot on, right? It's a webinar, right? As there's a limit to how much you can go into detail, but I think you provided a very high level summary of some of the things people need to pay attention on, right? Like you said, mentioned presidential order and the bill currently being reviewed by the Senate, right?
Yeah.
And since we didn't need to withholding tax and the Finance Act also, these are critical points in terms of how people should view updating Nigerian tax laws, right? So my next question goes to Fred. The question is, why is it important as accounting professionals to understand the nuances of tax audit early in their career?
Yes, thank you. So for a tax person or an accountant that is interested in tax, the audit is like the outcome of your tax, all the tax processes you put in place. The audit is like your report card. So the audit is your report card, not just for you, but for the government. The audit actually assesses how well you've done with your taxes. So for an accountant, it is not just important to understand the nuances of tax audit. It is important, first and foremost, to even understand what a tax audit is, how a tax audit is part of the dispute resolution process, and what is the dispute resolution process in Nigeria. So this is a webinar, and I want to be very, very short in my responses. But as a tax professional, the audit is actually where you are assessed most times. Uh, Someone says I'm not very audible. Is that true?
So
Dele,
I can hear you. I can hear you.
you can hear me?
Yes, I can.
Okay.
Richard,
Can another
can you
person
hear?
confirm that you can
Yes,
hear
I
me
can.
audibly?
I can hear him clearly.
Okay, great. Okay, so it's not for me then. Okay, so okay, so as a tax professional, you have to understand how to manage an audit, and it starts from day one. Yeah, because like I said, the audit is like where the tax processes you have put in place is assessed. Now, for the sake of this webinar, by audit, I mean every other tax inquiry process. For the tax inquiry process, you have a desk audit, you have your statutory audit, you have investigation, you have special audit. Yeah, so for the sake of this context, in this context, when I say audit, I mean all these tax inquiry uh, uh, processes, any one. So they are different, and there are different levels of inquiry, how far the FRS can go. But someone is still saying the volume is very low. So I'm concerned, Billy.
Okay. So you can confirm, Fred. Are you using the earpiece or something, right? I
Yeah,
guess.
Is it low from your end?
So I think it's not as clear as Richard, right? So I can hear you, but maybe it could be better.
Okay, just give me 1 minute, please.
All right, no problem. Richard, you can step in just to provide your own context. Why is it important for accounting professionals to understand nuances in tax audit early in their careers, while Fred tries to sort out his body.
Okay. Yes. So I think he has actually provided a very solid background. So one of the things that I would just like to add is that just like we want audit, I think once we have that mentality of what an audit means, it becomes quite easy to understand what a tax audit is and why it is relevant.
Can you hear me now? Is it better now? Sorry, Richard. Is it better now?
Very much better now.
Yeah, better. It's better.
Okay.
So Richard,
So
don't worry,
you
continue.
can go ahead.
No, Richard, you
Okay,
can continue. Don't worry. He will take the next question.
Okay. So what I was saying is that once just like as an accountant, once you understand what an audit is, to understand a tax audit is just as easy as the same way an audit is. So an audit is to assess a company's financial performance to see whether the true and fair view has been presented, like we all know. So similarly, a tax audit on the other end is conducted. Why the normal audit is conducted by what's it called now? The statutory auditors. A tax audit is conducted by the tax authorities to assess a company, just like the same way they do for the normal statutory audit, whether the company has presented and declared the true and fair view of its taxes in terms of tax liabilities and obligations, right? So now the reason why it is becoming it is important for an accountant is not just because of the audit this time. It is because of the implication of the financial defaults. For example, when I'm treating, and this is very common, I'm sure we joke a lot with it on Twitter. You say loan, some people will say loan is an income, asset is a liability, car is a liability. All those kind of mentality, if you bring them into accounting, it will look as if it's correct, but by the time you see the tax implication, you become wise, right? So what I'm saying in essence is that in summary, for accountants, when you are treating a transaction, when you are treating the revenue, you need to start thinking about what is the tax implication of this revenue. You need to start looking at what are the accounting entries to pass to appropriately account for this tax implication of this revenue. So you are not just concerned about the double entry of the transaction alone. You are concerned about the tax also, just like you purchase. And for your purchases, you are looking at the input VAT, you are looking at withholding tax. For your sales, you are looking at the output VAT, you are looking at possible withholding tax that might be charged on you. You are looking at the implication on the CIT. Even for your sales, for example, let me give you an instance. As an accountant, I'm talking from accountant perspective now. When you are into a company, let's say you are into provision of management services, right? So let's say I have a client, I used to have a client. What they do is that they just provide management services to others. That is, if you need to buy something, you need staff, you need all these things, they will supply them to you. You will pay them the money for the staff, and then you will pay them a premium for recommending the staff to you. Now, in the treatment of that revenue, in the recognition of that revenue, if you don't properly apportion the one that is a reimbursement and the one that is actually a revenue to the company, the tax implication is very significant. And by the time they come for tax audits, because you have not appropriated properly, we are likely to be faced with different liabilities. And that is why, as an accountant, it's very important for you to understand tax implication of every transaction that you post. Maybe that can make it more practical and everybody can understand better.
Yeah, Richard, thanks for that. I think you're spot on. Right. So let's move on to the next question. Right. Understand the basics of tax audit in Nigeria. So can you walk, so maybe Fred, you can step in. Can you walk us through the key stages of a tax audit in Nigeria from initiation to the final reporting, right? So that, yeah, just basically start from the very beginning, how it starts and how it finally concluded.
Okay, so the trigger for your tax audit is usually a notice, most times a letter from the tax authority saying you'll be audited at so time. They give a date and they request for you to make available certain documents in preparation for the audit. Like Richard explained what an audit is. The audit, the FRS will inform you that they want to come for an audit. Now, this is where there is going to be a field audit. Like I said earlier, there are different types of audits. For a desk audit or a desk review, which is still an inquiry, they don't request for you to come. They just make some requests, some observations, and request that you respond and provide additional documents, and they don't come. For a desk audit, it's straightforward. They send a notice, they request for certain information, and you're expected to respond. For a field audit, they tell you that they will come. And prior to them coming, also dates, prior to them coming, they want you to make available certain documents. As a tax professional, the audit commences at that time. So the first thing you have to do is this date convenient for me? If it is not, a good tax person will go back to the tax authority to say, I am not available on this day because of so reason, and negotiate a very good date that will be most suitable for him. Another thing is to bear in mind the request. So whatever date you are choosing, you need to be sure that at that date you are really ready and available for the audit. Not just you have to also look at the accounting department. If any request is made, will there be available support from the other departments to provide the documents that you need to have a very fruitful and successful audit, field audit. That's the stage of the field audit. So after the notice, if you want to extend the time, you write to the FRS and extend. You can put a call through to the FRS official and start having that face-to-face, interaction, or that close physical connection with the audit team. It is very important, and we'll get to that. After that, the actual field audit exercise happens. Like I said earlier, if it is a desk audit or a desk review, you don't have the field audit stage. It is just a response, a document. They just send a document to you, you respond, they assess you, and you pay. So this stage, the field audit stage, does not apply to desk audits, but for investigations and special audits, the field audit stage happens. And the field audit stage can take 1 to 2 weeks. If it's for the state authority, it can take just a day or two. So for FRS, you can go as far as 1 week. So during the field audit stage, they request for documents. There's a physical interaction. It can be done virtually also since COVID, but currently they still push for physical audit exercise. You have to actually have a very strong justification to make it virtual currently. So during the field audit stage, a request for documents, you engage with the authorities, you start to build the rapport with them. So after the field audit stage, then you expect the report of the audit. Now, before the report of the audit comes out, you can still have interactions. You can still send support documents. You can still, continue having that interaction, building the relationship with the audit team. It is very key. Now, after the field audit stage, you get your assessment. When you get your assessment, the law section 66 of CIT and section 55 PIT allows for you to now start to object for certain items you do not agree. You have to object within 30 days. You object. When you object, the audit continues. The FRS will review your objection. They are mandated by law to consider your objection. Look at the items you do not agree to. Objection means not agreeing to the assessment that the FRS or the LRS or the state authority has issued to you. So when you object, you now continue the dispute resolution. Once you agree with certain items or they don't agree, then there's a revised assessment. The revised assessment is based on the result of your objection. In the process of objection, you can also have a face-to-face meeting, a meeting where both you and FRS will sit down and have a conversation. It doesn't have to be you sending documents. You can request to have a meeting. Now, after the meeting and all the documents, you have a revised assessment. If you have a revised assessment, if you agree to it, then you have 30 days to settle it and you close your audit. If you do not agree to it, then the FRS will issue a notice of refusal to amend. Once they issue a notice of refusal to amend, you have 30-day period to now seek appeal with the TAT. Now, if you do not respond in 30 days, then you are required to pay, and if you don't pay, a demand notice is issued. Once a demand notice is issued, you have to pay, and if you don't pay, a warrant of distraint is carried out. These are the stages. But where you seek appeal with the TAT, the stage, it continues again. The dispute resolution continues. From the TAT, if you still do not agree, you can seek redress with the Court of Appeal. Then from the Court of Appeal, the Supreme Court. So these are the stages. I hope I'm being able to explain it in the short period I have.
Yeah, thanks, Fred. So move on to the next question, right? So from a perspective of how should, and this is to Richard, how should a young professional handling the initiality of tax audit, particularly in terms of communication and data collection? How should they handle it? Richard?
Okay. Yeah, this one is quite simple and straightforward. But I'll just say that the first thing is to, like Frederick has mentioned, you'll first be notified of the tax audit, right? So the first step, you've taken the question away. Yeah, the first step, the first and initial stages would require you to get document ready for the audit. So the first thing to do is to look at the accounting period that is being audited, because sometimes the FRS or LRS or whoever is handling your tax audit are human beings too, and they make mistakes. There is possibility that they've audited that period before and they are breaking it again as part of the year they are auditing. So you first do that check to see that the company, first of all, your company name, the TIN number, they are correct. It's not like they want to issue a letter to Dangote Cement and they mistakenly issue it to Dangote Industries. And because you did not check it, you just went ahead with the audit, right? So coming back to what I was saying about documentation, check all the information that relates to the audit. When they say we're inviting you for an audit, usually there'll usually be a delay. Maybe the letter has been written on the 1st of November and you're getting it on the 15th of November, that they are coming for audit on the 25th of November, like a week or 2 days after. So the first thing to do in that kind of scenario is to quickly pick up the letter. If you have a consultant, pass it on to them and tell them to help you defer the audit to a realistic timeline. Now, when I mean realistic timeline, make sure that it's a timeline that you think you would have had all the documents ready. Then in the initial phase, we have two stages. Sometimes they usually start with a preliminary audit. Now, I think Frederick already mentioned this, that we have different types of audit. We have desk review, we have tax audit, we have investigation, right? So for desk review, you would usually not have so many stages. You can just have, they just call for certain documents around a particular return you have filed, and then that's all. But for tax audit proper, they look at, they invite you for preliminary audit, that is preliminary meeting, where they discuss what they want to do they want to understand your company. So in this, if that's the first stage that you are being invited for, you can at that stage negotiate for, let's say, 2 weeks or 3 weeks extension of your audit. And why do you need to do that? It's just for you to be able to get all the relevant documents that you need. Now, in terms of documentation, what are the documents you need? They are usually very common. First of all, your audited financial statement. Number 2, your trial balance. Number 3, your general ledger. Now, while there are a lot of other documents, these 3 documents are very important because they must tie to each other. Your audited FS and your audited trial balance, that is mapped trial balance, must tie to your audited accounts. Your mapped trial balance figures must tie to your GL, and if there is any variance, you must have reconciled that before you go for the audit. And when you have done all this part, supporting documents for major items should be made available also. Then you have your VAT, returning tax returns, and all those other kind of returns. Those are documentation that you need. But most importantly, make sure you have like 70% of the document that is required for the audit before you even call them to come for the audit. And based on the FRS that I know and LRS that I know in this recent time, they are a bit flexible to adjust to your requested date. So if they say this meeting must hold next week, if you can prove beyond doubt to them that please, it cannot hold next week, because if you come next week, there will be no document to work with, then they can possibly help you to defy it, right? And you can have the meeting in 2 weeks or 3 weeks time when documents are available. So in terms of documentation, make sure that you have all your documents. Now, because we will see ask more questions later, so I'll just pause it there so that we can move to the next question.
Yeah, thanks a lot, Richard. Thanks. Trust me. So I'll skip this part because there's a lot of questions, right? So as much as possible, let's just keep it brief. But what we've tried to do is break the questions into smaller chunks because a lot of questions will still be asked, right? So for example, the next one is setting up compliance systems and processes. And this goes to Fred. What are the fundamental systems and processes that should be in place to ensure tax compliance?
Yeah, so I think as an accountant, you should have a good appetite for ensuring that you have all the necessary documentation, and also you should have a good sense of tax compliance. The first thing is to ensure that you file your returns on time, and as much as possible, try and file them correctly. Always ensure your returns are filed on time. Communication with the FRS is swift and on time, and payments are made when they should be paid. The second thing is the documentation, because whatever thing you do, tax as it is in Nigeria currently is very much reliant on documentation. You should have all your documentation from day one, all letters to the FRS, all tax returns filed, support documents, identification of items that can pose tax risk. You should be able to know those items and have sufficient documentation. Richard mentioned reimbursables recently. You should also have sufficient support for such kind of payments. So you have documentation, tax compliance, and there are some other things you can put in place to ensure proper tax compliance. For instance, if your tax budget allows you, you can have pre-audits, that's tax health checks, pre-audit with Big Fours and tax consultants, just to check the health of check if compliance at the end of the year has been done properly. And you can have reviews, third-party reviews by your consultants before you file returns. All these things are what helps to improve your compliance and tax processes. Thank you.
All right. Thanks a lot, Fred. So I'll take this to Richard. So what kind of documents typically required during a tax audit, and how should you prepare for this in advance? So I think there's someone that, I don't know, they're just trying to just play with this webinar. Let me just pause the recording. And
there's also some feedback. So
yeah, so don't worry, I'll
can
mute
we
my
ensure
side.
everybody's on mute? Yeah. Okay, is it from your end?
So have you been able to remove the person? There are two people. There is one Ritik
There are
one,
two people actually. There are two
and
people.
Yeah, all right, so we can continue now.
okay. So yeah, person has made me to lose my line of thought, but we'll just continue. All right, so setting up compliance system and processes. So what are the kind of documentation typically required during the tax audits, and how should business prepare this in advance? So like I mentioned before, the documents are typically the same thing year in, year out. I'll just simplify them. You need your audited accounts, trial balance, financial statement, trial balance, general ledger, invoices for custom, that is for sales, and then invoices for payables that you have done during the year. That is your purchases invoices. Then you need your VAT returns, withholding tax returns. Ideally, you can get this from the tax platform these days. You also need document regarding your purchase of assets, that is CAFA, that certify that you own the asset that you claim capital allowance on. You also need documents that surround rental agreements, that is expenses that you've incurred, supporting documents to justify them, right? So those are basically what you need. And the tax authority will usually give you a list of these documents before the audit commences. So the second part of the question says that, can you hear me, please? Can you confirm you can hear me?
Yes, Richard, I can hear you.
Okay, so the second part of the question says, how should business prepare this in advance? Just like my colleague has mentioned, these are documents that you should already have in place, because if you're an accountant, I believe that for every, they say if it's not seen, if there is no evidence to support it, then it never existed in the first place. So you must have supporting documents to justify everything you have done. That's basically what I'm going to say around this businesses. How should business prepare this in advance? You would have them already, so you just bring them out from where you kept them.
Yeah. Yeah, so I think just to add to it is proper filing, right? So sometimes it's either you are putting them in terms of maybe based on the date of the event or in alphabetical order. So there should be some level of sequencing, so it's easy to locate and identify them. And sometimes because of how businesses have gone you may want to scan and keep some of these things in like cloud services, right? So that you can have them easily access them remotely whenever you need them, right? But you can also have physical copies of them in your business premises. Yeah. Yeah. Okay, so I'll take this to Fred, right? So can you share some best practice for organizing and maintaining financial records to avoid common compliance issues? Fred?
Yeah. So best practice, like Richard mentioned, first thing is to ensure that your financial records are available. One, two, they are correct and complete. So you need to ensure that your GL ties to your FS and you have a closing TB. So a lot of companies, after their financial, their FS, their audits, they do not reconcile the audit numbers to the GL and TB after the statutory auditors have carried out their work. So there's usually a lot of mismatch. And if you wait for the tax auditors to come before you start correcting this, it's usually a mess. So you have to ensure that you close the books and you complete all these major financial records, your TB, your audited FS, and your GL. You need to close it. You need to close it on your ERP and have everything complete and correct. Dele, you need to also look at someone still typing something here. Dele.
I hear you. So the someone is handling dealing from the chat room perspective. I'm just opening the
Okay.
chat room now. So I'm seeing that they're messaging in chat room too.
No, there's someone still typing on
Okay. Oh,
the
okay,
shit.
Nika.
Yeah.
Yeah, okay, I can see that.
Yeah.
No,
Yeah.
someone handle that so that we're not distracted.
Yes,
Yeah,
please.
yeah. So thanks. In terms of best practice, right? I agree with you that sometimes people forget the fact that they need to keep certain records, especially the final TB that was used to agree with the financials, right? Having a record where it's kept. Because sometimes some people have done a good work in terms of doing the audit and having a TB. But then when you ask them for the final trial balance that agrees, they struggle with having, especially when they're audit adjustment. Even when they have a final TB, there may have been some audit adjustment in terms of reclass that will pass for the purpose of the financials. They don't have that detail and why do someone into the pass. So you have a financial that they don't have the final numbers on what makes the difference, right? And important to have those things. Yeah. And it's as simple as it looks. It will lead to serious compliance issues, right? Because the tax man usually just does very high level analysis and just throws some certain questions. So yes, I agree with you in terms of what you said. Yeah. Yeah. So I'll give room for people to ask questions. People can signal a raise of hands and we can get them opportunity to ask questions at this point, right? I know that I intend, yeah. So if anyone has any question, you can just signify by raise of hands and I will basically unmute them. Okay. Hi. Hello, Tani. Hello, Tani. Hi.
Okay.
Yeah, hi.
Good evening.
Yeah,
Good
good
evening,
evening.
all. Okay. Thank you very much for this webinar. I want to ask, how do you handle, that's to the panelists, please. How
Okay.
do you handle a situation whereby you have presented all your, let's say, invoices to the tax auditors, and yet they are saying that, let's say your total amount of revenue for that specific year is 1 million. They are saying that you have done up to maybe 1.5 million, whereas you don't have invoices to show that it was actually 1.5. You as a business owner is saying that my invoices for this year is 1 million. Yes, the tax auditor is saying you have done sales of 1.5 million. How do you handle such a situation, please? Thank you.
All right. So Fred or Richard, any of
Okay.
you?
Okay, I think we'll jump at it. So the first thing is, if you're very sure, so two things. What does your financial record say? Like, for instance, not just your invoices, what does your um financial statement say? So you need to ensure that the invoices you've presented is what ties to your financial statement. Let's assume it's the same thing, that indeed your financial statement says 1 million and you presented 1 million invoices, and FIRS is saying you have 1.5 million. You have to now request from FIRS. They have to now justify why it is 1.5 million. Now, bear in mind that FIRS has access to a lot of information. So it could be bank records that they've gotten from third-party sources. It could be withholding tax remittances from your customers. Maybe when they grossed up withholding tax, they saw that it's 1.5 million. And so, but you need to confirm from FIRS what their source of 1.5. Why are they saying made revenue of 1.5 and not 1 million? But like I said, you also need to confirm that all the documents you provided to the FIRS actually matches what the position you are putting forward. Is it actually 1 million that your financial statement says? Is it actually 1 million that's in your bank receipts? Then you can now push the conversation forward if you're sure that it's actually 1 million.
Okay.
Okay. Thank you very much.
All right. So I think key is getting the FRS to confirm what their position is and how they arrived at the position they have, because they have potentially other sources that they may have factored in arriving at what they have, right? And yeah, being able to ensure that your documents reconcile. Right. Does anyone have any question? Or I'll just go to the chat room and just read some of the things. So the first one that comes to mind, and sorry if I miss out your question, you can just retype, because we had some unusual elements in the chat box. So I'm always having issues with LRS auditing, saying my company PE are not accurately calculated. So a PE template will be appreciated. Okay, so you can reach out to us and we can share you a PE template that can help you. Yeah. And then there's Dauda. Let's see. Yeah. So Dauda Balogun, what is your role where your company has an external tax consultant? Richard, do you want to shoot that?
Okay, yes. So it's quite simple. Your role is to make the life of the consultant simple, to make it easy.
Yeah.
All right. So because trust me, there are many instances where you have a very good consultant, but you have a very poor internal accountant, and that results into stress. So what you should do is that in terms of documentation, Frederick has mentioned some of the important things to watch out for, but I've also kind of jotted down some quick points here. One of the things is to have accurate bookkeeping. That is, when auditor says, what does this amount relate to? You should not just tell us that it relates to sales that you made to social person. You should be able to give us the invoice that supports it, right? So then, what's it called? Regular internal audit is very important too. So internally, you should have done all those checks as an accountant. If you have done that, by the time your consultant is requesting for specific documents, even if you don't have it, you already know that you don't have it. And also, it's your role to disclose the truth to your consultant. If you lie to your consultant, you are only going to make them look stupid in front of the FIRS or the LIRS. So give your consultant the true and fair view of what is happening in your business. Sir, for this invoice, I have a client. The client has an asset of close to 2 billion. And total invoice that they have is not even up to 1 billion for the assets. Meanwhile, they have the assets physically available. What happened? They've lost all the documents due to fire incident, and they did not have a letter that they wrote to the FIRS to justify that a fire incident happened in their office. So in that kind of case, we now have to use relationship to manage the issue. But if you don't disclose what has happened to the tax authority, to your consultant, you will make the tax authority to have upper hand against your consultant, and that will make it look as if they are not effective. So that's what I'll just tell you. In terms of documentation, information, please share everything with your consultant. And then, except for some consultants that are not so good, because I know that there are some consultants that are also wicked, they'll use your information to steal onto you again. So maybe maybe that might be the reason why some people will be told. But I think the best thing to do is to disclose everything to your consultant, and they will know how to manage the issue.
Thanks, Richard. So just to add to that, right? So at the end of the day, the reality is that the internal person has more information than the consultant. So the idea is just at the end of the day, the consultant will give you direction and you just help provide that information to help him out, right? But one thing I'll also add is that remember this joke that someone once said that there are two people you should never lie to. You should never lie to your doctor or your lawyer. But I think I'll add one more to it. Do not lie to your tax consultant, right? Yeah. But yeah, so I think I have more hands being raised. So I have Tijani. Let me unmute Tijani so that we can hear some things from Tijani. Hi, Tijani. Hello, Tijani. Hi, Tijani. You can unmute yourself, Tijani. Tijani, if you're talking, we can't hear you.
Hello, good evening, sir. Can you hear me
evening.
now, sir?
Yeah, sure, we can hear you, Tijani.
So my question goes thus. So what is the role? Can you hear me, sir?
Yeah, we can hear you, Tijani. Please speak on.
Okay. So yeah, my question goes thus. What is the role of an internal control officer when it comes to tax matter in an organization? And secondly is that as an internal control officer, so where will you come from when your organization do not charge withholding tax, but our supplier, they do always charge us VAT. So where will you come into the matter as an internal control officer? Thank you, sir.
Okay, I want to give that a shot.
All right, no problem, that's fine.
So as an internal control auditor or officer, just like we have, I don't want to use COSO framework, but one of your objective is to prevent the issue before it escalates, right? So one thing that you should do as an internal control officer is to be checking the compliance of your company on a, let me say, week-to-week basis. In many organizations, internal control department, except if the unit has been abused, in many organizations, internal control department do not usually have so much bulky work. Their work is always more of reviewing what has been done by others. So I think you should have a calendar that helps you to, first of all, track timelines of deadlines, right? Secondly, track accuracy of information provided. For example, when a particular guy was working with me at some point, for input VAT, I'm giving you a real life scenario so that you can relate very well. You know, we have what we call input VAT and output VAT. Generally, we know that output VAT is the VAT that we charge on sales. Now, this guy has forgotten that there is something that is also called cash and accrual basis. So he will spool the entire VAT on sales recognized for the period without considering that not all the VAT, not all the amount has been paid. And then he will advise the board to go and pay the thing. And they've been doing that for several years. So, and they have a lot of receivables that is not even collected. So the company is a cash constrained position. Now, as an internal control officer, it's your duty to discover that kind of thing and say, oh, this money you have said we should go and pay, have we received it from the customer? Right? You take a more tactical approach to resolving issues, to going deeper into what is happening. Then from tax audit perspective too, you should be the one championing and say, what are the audits that are open? Have we closed the audit? For payee, have we made our payee for this month? Have we paid our pension for this month? You need to look at how to block the company from paying penalty and interest from regular compliance, not to talk of tax audits, right? So you have a lot of roles to do as an internal control officer. Those are just brief out of it, but I think it comes to your interaction with the accountant and the tax person in the company too. So maybe the next person can also kind of give.
All right, no problem. So let me unmute Samuel, unless Samuel has a question, raise his hand. So let's hear from Samuel.
Good afternoon, everyone.
Yeah, good
Thank
afternoon,
you. Can you hear me? Okay. Thank you for this wonderful presentation. Please, during Mr. Richard's presentation, so he mentioned the aspect of revenue. That whenever we are recording revenue in our book, we need to be very careful of the tax implication. So he now cited one company that are rendering management service, but I did not get that aspect. I just need, before we recognize revenue in our book, how are we going to be very careful with tax implication? What do we need to take cognizance of?
Okay, fantastic. So that is one of the beauty of tax that I love is that tax, you cannot, if you don't know tax, you might struggle with that. If you don't know accounting very well, you might struggle with tax. You might understand tax compliance easily, but if you don't know accounting, you might struggle with tax. So from tax perspective, what I'm saying from that revenue perspective, if you look at from IFRS 15, I talked about revenue recognition criteria, the 5 steps. I'm not going to the 5 steps now. I'm talking about the actual revenue that you recognize from a business transaction. There's somebody that is having a background noise. Can we mute others first? Yeah, so that the background can.
No worries from my side.
Oh, okay. Because I'm using headset, so it's going into my ear directly. All right, sorry about that. So yeah, what I was explaining is that if a business, for example, let me give you a very typical example. Reimbursable expenses, right? If me, for example, let's say accounting yard has been engaged to provide support staff to a company. That is, accounting yard is into HR services that way now. Now, as an individual or as a company, accounting yard will say, for every 10 employee I pay you, the salary of the employee is 50,000 naira for 10 employees. That is like 500,000 naira, right? And I will charge 20% as my management fee. Don't forget, the money to those employees are direct wages to the employees. The company will not recognize it as revenue, depending on the revenue recognition criteria of the company. Don't forget, everybody have their own accounting policy. But if you go ahead and recognize the entire money, that is the entire 500,000 plus the 20% that they've paid you as revenue, the implication will be that when you are doing your CIT, the entire amount is what you will recognize under your CIT. Meanwhile, you've not actually recognized the entire revenue. You've only recognized that portion. So it is important that you are able to treat it accordingly and say, this is my actual revenue, and this is the reimbursable part or reimbursable cost arising from that revenue. FIRS, this is common to companies that have what they call I've forgotten, there's an arrangement that they call it in accounting, but it's common to multinational companies who sell products to Nigeria, but their own is like an intermediary kind of arrangement where they just collect that commission and then they pay. We have a lot of companies in the port, Nigerian Port Authority, that do that also. So if you are recognizing the entire money as revenue, you will also feel the impact from withholding tax perspective. Because, for example, if I give you an invoice and I say total invoice for this month is 500K, okay, 500K, 20% of 500,000 naira will be how much, like that? Like 100,000. So I give you an invoice of 600,000 naira. Now, where do I charge my VAT? Anybody to answer that? If I give you an invoice of 600,000 naira, 100,000 naira relates to the actual management fee that we charge, and then 500,000 naira relates to the reimbursable expense, because that is direct cost. So on what amount do I charge my VAT? Anybody to volunteer? Maybe you can type it in the box. Let's see. Just for us to make it fantastic on the 100K, fantastic. So if you have not treated it properly on your invoice to show that this is reimbursable, this is management fee, you would have mistakenly charged VAT on the entire amount. One, the person that is charging you withholding tax will charge you withholding tax on the entire amount. Now, like Frederick has mentioned, for the woman that asked the other question, that says the FIRS is telling them that they've made a revenue of 1.5 million when they've actually made revenue of 1 million. That might actually be the issue. If the company has charged you a 10% on 600 million instead of 100,000 naira, by the time they do a work back, it will look as if you have recognized huge revenue. Meanwhile, you have actually recognized only small portion of that revenue. So there's a way all these accounting treatments links and affect your taxes and have a very huge tax implication if not properly managed. So I will encourage you to, aside from getting the tax consultant, also get an accounting person to help you set up your accounting system so that you can have a good finance transformation in your company. Hope that answered your question.
Thank you very much, sir. Thank you. It's clear.
All right.
Thank you.
Thanks a lot. So I know we've not answered everybody's question, but we'll move on to the next space and see opportunities to ask questions when necessary. I see that it's quite engaging, and I see that a lot.
We can't hear you again. I think something happened.
Can you hear me now? Is it better now?
Yes.
Okay. Yeah. Okay. All right. So worse. The number of hands are up. Please wait. I can't share my screen. Hold on. Let me pause the recording. All right. So handling the tax or the best practice and avoiding pitfalls. So this question is to Fred. Based on your experience, what are the key challenges that businesses face during a tax audit?
Okay. Yeah. Thank you. So usually, yeah, it depends on the kind of business. When I say kind of business, it depends on so the FIRS or the tax authorities actually know what different types of businesses face. So for small businesses, their tax challenges are peculiar. For big businesses, their tax challenge, for companies that have a more structured tax environment, their tax control processes are structured. The FIRS actually knows what to focus on. So for some small businesses, documentation, and when I say documentation, it can go as so a lot of times we call for audit, and the businesses do not even have an audited financial statement. That's the first red flag. Where do we start? So and even if they have, some do not even have supporting documents. They can't find invoices. Then for mid-level businesses, then we have issues around this tying your FS to TB, even if you have documentation, it just messes up the financial records. The FS does not tie to the TB does not tie to the GL. So how do we work with the schedules? How do we work with it? For bigger businesses with more structured tax systems, and I can tell you comfortably that FRS does not even focus for certain businesses, some certain multinationals, they don't even focus on their VAT and withholding tax because over the years, it is almost seamless. In fact, it will be stressful for FRS to even review their VAT and withholding tax. So they don't even consider it as such, but they look at the uncertain tax positions they've taken. And so those businesses focus on those areas of taxation of their tax systems. So it depends on the kind of business and the level of their growth stage. But what I would say is documentation is key, and that is where a proper tax audit starts from. You have to have your financial statements, you have to have your supporting documents, your invoices, the reimbursable invoices that match whatever you call reimbursables. Everything should be well documented. And when you remit, you have evidence of remittances. Generally, documentation, paperwork should be tight. So those are the key challenges that businesses face.
All right, Fred. So I kind of like this question, and I would like to Richard to also maybe put some coloring to this particular scenario. Right. So Richard, based on your personal experience, what I think are the key challenges that businesses face during the tax audit?
Okay, so without repeating everything he has said, because he has actually covered approximately everything. See, the first thing is that if you don't understand the document, don't bother to send to the tax authority. Don't send for the sake of just sending it, because a lot of people do that. When they say, oh, give us the document, you just bombard them with documents, and you don't even understand the document you are sending to them. So, like he has mentioned, you can.
Yeah, I can't hear Richard. Can anybody hear Richard? Maybe it's just my side.